Okay.
So there's your chart. So yeah, as we know, you can just do that basic objective, and it's got some serious upside to it. If you take the swing from 1980 down to the low there, yep. So we just can visualize that and just think, well, we don't need to worry about the objective because if we have 2-3, that'll be enough for a minute. So we can just write down that number at 0.25 and then bring it back to a quarterly, Judd.
Okay, hold on here. Beastly's after me.
The 199,900 is the breakout of the old high in 2000, in 1980. And then we're back above the quarter. And if you come into a weekly and daily, all the averages were basically where we held last week.
Yeah, and look at where we are on the weekly here. That's oscillator resistance right there. So that's what, to me, that's picking up that 1800 level in the straight gold in dollar terms.
You've got that, and then you've got the 200 a day and 400 a day. If you go to that, came in last week low, not 194 to 195.
Yeah, okay, so there you can. All right, I had to put the right. Let me. All right, so you're seeing gaps on this chart, guys, because this is pit session yen, okay? It's not the all session. So look what happens if I put up the pit session yen. You know, you're not gonna see the gaps. And there it is in dollar yen. So it's a little clearer.
And you've got the 400 day up there as well. You bring the 400 day.
Yeah, right here.
Right, and you got the 200 day, yeah.
Yeah, that's right through there.
So then seasonality, gold against currencies picked up a low last week, and it did against stocks. So, I mean, I was looking at this because if you go back to the 30 years, it ran right into your number in the 764, right?
Right.
Last week, 156.27, 157.03. I mean, I'm jumping around a bit, but I'm looking at the long end having done enough. If you go to HXS, which is the Aussie 10 years, it hit the 764 of the swing last week when the 30 years did too.
Let's see if this is, there it is right there. And which, yeah, look at this.
Yeah. So that hit it hit the top of your cloud and just did the swing count there. Not the swing count, the fib to the 764, which is 98.24. Now it's at 35. The other one.
Yeah, now yesterday I was looking at the gilts because the gilts on the long time frame stuff.
Now, why don't you? The other one I looked at is look at the US 30-year yield divided by the Dow, the TUS 30 MY.
Hold on, I've got that over here. Somewhere.
That gold yen chart is unbelievable potential.
Andrew, all the gold charts, gold Swiss, gold.
Yeah, I agree.
That's all of it. Yeah.
Well, I mean, as we discussed a few weeks ago too, are the gold versus the Dow, the Russell, and and don't forget this gold Russell at 84.30 with the opening range. That's still sweating on it. The gold S&P, Dow, and Russell have all been.
Yeah.
Well, I mean, look at the pit S&P here at the 200 day against the 30-year yield.
Yeah. The gold, the yield to the Dow hit the 764 on the most recent swing count, and the swing count from 2018 down to the low in 2020 this week. Last week we had all those outside range days on the Dow versus the bond.
Well, and it's doing, you know what? And again, you don't trade the gold. Don't get in love with it.
No.
But the interesting thing is it's doing it as yields are starting to, as John Authers, God, has he gotten boring? I used to love reading.
I haven't read them in a long time.
But as we looked yesterday, German yields had gotten to only negative on the 10-year, 8 basis point. The Netherlands actually went positive. So as he wrote this morning, there was less negative yields nominal. We're talking about around the globe, less sovereign debt. Okay, so it's been hanging in here where it should have been getting hit. So that it's just, you know, again, we talked about it yesterday. There's nothing here. And today gave you an opportunity, right? This was a really good test today. When you saw the inflation data, take it for what you want. You know what? Some things move in, some things move out as food prices have come off, as prices have gone up, and now we're getting higher owner's equivalent rent numbers. So this is going to be really funky stuff. And European numbers are, I mean, with a straight face, these people talk about it with a straight friggin' face. Like, well, I don't care. To me, I'm a real yield person. Real yields are as negative in Germany as I've seen. Okay. And Germany is the keystone to Europe. And they're trying to put that government together to see what coalition they can get. This is big stuff because this does make a difference. And if the Free Democrats, I know Robert's on, if the Free Democrats do, is there anybody from Germany on, Judd? Is there anybody from Germany on?
I don't know.
Okay, usually there's somebody. But this is important because in putting this coalition together, the Free Democrats, who may be the swing in all of this, they're with Lindner. If he gets the finance ministry, he's very concerned about the inflation data. And you've got strikes going on. You got strikes going on in the U.S., not from public sector unions, because again, I'm not even going to speak to that, but from private sector unions. Again, they're working longer with prices going up. It's hard to stay. And I don't know. And the Fed's just a bunch of bullshitters. So, and I can catch Clarida in his bullshit from yesterday. God. If you want me to lay it out for you in 3 sentences, I can lay out. Here's Clarida yesterday for you, Andrew, and everybody else. Now he tells you about the September meeting, which is kind of interesting because the minutes do come out today. So in a speech yesterday, so they're talking about tapering. And he says this, and I'm quoting, "At our September meeting, the committee continued to discuss the progress made towards these goals," meaning maximum employment and price stability goals. "And I myself believe that, again, listen to this closely. I myself believe that the substantial further progress standard," okay, because that's what forward guidance is built on, "substantial further progress standard has more than been met with regard to our price stability mandate and has all, I'll say that again, and has all but been met with regard to our employment mandate. So now we have Powell and Yellen, who 2-3 months ago told us, and they told us several times, that real unemployment was still hovering around 9.4%. But now here we have Clarida telling us that the standard has been met. Well, who's lying? Somebody's lying. Somebody is playing with the data to create a picture that, who is it? I want to know.
Well, I don't know, but these guys are a bunch
I
of
don't,
idiots.
I don't know either, but pay attention to it because
Okay, and the other thing here is, Ira, we were just talking about this 1800 level on the gold. It's
Yeah.
going to match up with a cloud on gold and yuan.
good.
So there's there, that's going to be resistance.
Good, good. I'm getting out up here. This is my resistance area. Traders, and again, I'm just trading it.
Yeah, just start bleeding out of it up here, you guys, if you're long.
And I'll stress this again. We talked about it exactly yesterday. Gold is not an inflation hedge. Yeah, because by the time that happens, things have already moved dramatically.
I think gold's picking up, real yields collapsing again.
Is what?
Real yields collapsing again.
Yeah.
That's why. And or just problems with these fuckers fucking it up. But there's also some seasonality. But once you saw the 30 years get into 7.
But I bring up that Clarida speech yesterday because again, that's Fed credibility and that's ECB credibility. You tell me, step back, anybody in this room, step back and tell me how they get out of this trap. Tell me. I'm willing to listen.
No, and then and
if you don't have an answer, then you better start looking at central bank credibility.
well, yeah, and that's why you must be doing the work against everything: gold currencies, gold stocks, gold bonds, gold yields, and you're looking at the 30-year, which ran into the 764 of the whole move into Judd's numbers, and now we're coming back through the 400-day in the 30-year yields.
Yep.
Go away. The Aussie 10-year bond coming to the 764 into that inflation data, into these guys are fucking caught.
Well stated, Andrew. I can't say it any better myself.
That gold, the reason I just got over those gold yen charts is it's the significance of that swing count is so massive. And I granted, you got to, if you haven't been trading if you hadn't been trading gold in the last 2 months, you've just been chopped. You haven't necessarily lost any money against stocks. In fact, now gold's beating everything in the last 2 quarters against stocks. But you've been basically fighting a market that wasn't trending, it was churning, and it was still trying to work it out. The only thing that was really trending were the commodities and the long end and the yield curve, but the rest of it hasn't. And you won't start to see significant dislocation in terms of equity markets unless you start to see some currency volatility. That's the big one. Until you see that. Now, there was a great learn about 2 weeks ago when the Nikkei got absolutely pummeled by about 9% over 2 days, and Aussie yen was higher.
Right.
There was a secret there just in itself that the yen was doing something very different. And then you go and do your gold yen chart. Now that gold yen chart, you can pit against the wall because you've got a stop loss 2 or 3% away from potential 30%.
Excuse me.
Just as a chart. I mean, just a chart. When you don't make new highs against a 1980. And that's why you keep searching across the board to find. And I'm finding a lot of stuff now because the fight's been on the last few years between all these inflationists, deflationists, transitory or whatever. And you just get caught in the fucking narrative, just trade the numbers. But
yeah, I really, you're putting it so well. That's all I can say. So
but now there is some shift, and they've got some problems. And I was banged on about it forever. years, in fact, about the credibility of these morons. But, and you know, you can look at the way platinum's trading and copper's trading as well now. So unless I can start seeing, say, copper start to give it up relative to gold, then I can't get too bearish on the stock market. Yeah.
You know, what Brian wanted to talk to you, both of you about, he wanted your comments. You know, yesterday we were talking about dollar yen.
Yeah.
And so Ira, you came up with a, you know, you were kind of looking for a place for the yen to bounce.
Well,
When,
wait. I said I wasn't bearish the yen, and I was locking up with the people who were telling me that the yen had Monday was a big down day when a lot of banks on because of energy, because Japan imports so much energy. And my response was, wait a minute, then it's the euro yen that bothers me, because as we read the headlines now, it's Europe that has far more problems with energy than Japan does. Yes, Japan has to import energy. We know that, but they could also turn back on the reactors, unlike Germany, where a lot of them have been decommissioned. You know, outside of Fukushima, the Tokyo Power Company, TIPCO, they could turn on some of those reactors if need be. But my question back to all the purveyors of bullshit, of problem, as we say, were that, well, if you had to pay more for energy costs, wouldn't you be doing your best to try to get your currency stronger, especially because everything's paid for in dollars when it comes to commodities, ultimately? So that was my only point. And those who were making the case, well, that's why the yen was going down, I just didn't accept that narrative. I was challenging it. That was my main contention. If anything else got out of there,
well, the reason we started to have that conversation was because I was just looking at the longer term charts that all look like it's a massive breakout for yen weakness, just on a technical.
we're right. And I said the technicals look terrible, which is why I'm not there yet. I'll trade it just like I will everything else. You know, if I see, but I was much more interested in the yen crosses, which got us to the Canadian, you know, we went through
Canada yen, all of that.
Right. Well, my point was that that narrative was pure nonsense. And I told you I was sitting in the airport. I probably read 10 of them.
What's an airport look like?
I was at Kennedy on Monday.
We don't get to do that over here.
Yeah.
They're doing massive construction, and they're also, you know, LaGuardia, certain parts of it look great. The other, you know, they still haven't gotten to the gates areas yet, but lots of work, and there's a lot of work going on at Kennedy, because I flew Kennedy to Phoenix. And I have to tell you, American Airlines did a great job, because I left 2 hours late, but the fuel pump, at first I thought it was going to be like one of those classic slowdown issues that we see, but the fuel pump was broken, and they had a plane that had come from Austin, which was evidently not going anywhere. It was the same 737, same configuration. So they didn't have to re-ticket anybody or anything. So that was actually, they handled that very, very well.
Okay, so I got two more questions. Andrew, Stanley, you know, since we're recording this for a lot of these trading challenge kids that are in the Pacific Rim, he wanted to, if you have a few words about trading the U.S. markets from the Pacific Rim and your sleep deprivation.
Great question. I haven't worked out how to do it properly, other than to get divorced, separated. No, I'm joking. Look, most importantly, and this is probably coming from the guys to work with Paul Jones, the most important markets, I mean, you've got to do your work. So you can't just wake up and just hope you've caught up. And that means you've got to do a decent amount of work on the weekends. I try to get it done pretty much on Saturday morning, so I'm prepared following week. I prepare around what the economic numbers are probably for 2 weeks out. And because I'm doing it basically every day, I'm not sort of having to catch up. So you kind of, it's rote learning. I do it longhand, so it's weekend. And then really during the day, I feature the opening of each market for about 2 hours. So I'll watch the opening of Asia, and then I'll watch the opening of London, and I'll watch the opening of the US. Asia, other than a couple of times like 2012 when Abe was elected, financial crisis in 98, tends to be pretty, or when Trump was tweeting last year, tends to be pretty quiet. So you can do a lot of work, but you got to get your rest. Watch the European Open, and then you watch the US Open. Then some markets will, some jurisdictions will be more important than others at different times. But yeah, don't try and sit by a screen for 8 minutes.
Let me add in with you, because from this perspective, because I'm 3 hours behind New York now, it'll be 2 hours because Arizona doesn't change its clock. But I'm up at 3:30. I'm up at 3:30 this morning by form at the desk, and I probably checked through the markets. So I'm probably busy at 5 o'clock. Chicago opens, Global reopens at 5. So probably from about 5, once the grains open at 7 Chicago time, I've really sat down, but I'll try to trade certain markets. So my last look is probably around 9 o'clock Arizona time, unless the markets are really humming. But I'm back at it 3:34 in the morning.
Yeah.
3:30. I'm at this desk to take a quick look to see where I'm at and see what I have to review. But I'm on the other side of you, Andrew, but I don't just sit down and start banging away. That's not happening.
No, well, I think the crucial thing is, as you're here in this room, you will refer to charts touched on 2 months ago. And it's still in my work, because I do the same kind of work every weekend, and then I just roll it into each day. So again, it's a question also how you time frame. Actually, the work's the same. You just got your time frames are different dimensions of trading. It's how you execute. But yeah, you can't sit by the board all day. I think opening markets are critical, and I always watch the end of the day by an hour, and then you get on with your day. Do something different. Go for a run. Do some exercise.
Go exercise. That's what I'm going to do in about 10 minutes.
Yeah, you got to do that. Got to keep fresh. But again, I wake up and I go, okay. And obviously I use CQG, so I've got thousands of alerts plugged in, and I have if some alerts go off, I'll get up.
Yeah, and it's really important to walk away from the screen so you don't get screen stare.
It is so important. It's one of the much better things, and it's made me more patient. Today's a classic day, right, Judd? We had run up into gold. I knew the CPI was coming. That could be a market mover.
Yeah.
Put an order well below the market, and I got filled on it. And if I'm sitting here, not happening, because I'll cancel that. So you know what? I get my work done. I set my work, and I go from there.
Yeah, and you and I were chatting about it. It was, I mentioned it in the room that the 5-year was running the metals, and I didn't like the first high because it was right into a matrix zone. Came all the way back down, and then I was looking for the 5s to reverse, and you basically said you wouldn't disagree with that, and it turned around, went right back the other way. So it's trading your time frames, trading your scenario setups. What's the relationship, and which ones are in step and which ones are moving in tandem?
That's right. And knowing, because I stressed it yesterday, and I've stressed it the 5, well, especially on the unemployment Friday, right, which was October 8th.
Right.
The 5s are running the show all ways. And it's taken a lot of passes with them. And we've seen it. I mean, Monday, the bond market was closed, but the 5s had a miserable, I think it were in the futures terms, they were down 9 ticks. Yesterday, even when the 30s got going to the upside, they couldn't get any traction. And today they were going in opposite directions. Now, I mean, if you look for the week, this will be very interesting. If I tell you for the week, the 5-year is, I'm speaking of futures terms here, so bear with me. I don't have the yields in front.
Yeah,
of me.
I got the futures chart up, and the only reason I said that to Eric is, this is something important for you guys to do. Go all the way through don't get stuck in a short-term chart. See what matches up. And if you go out to a monthly, you can see it's one of these 50% levels. You can see it's a momentum level on a quarterly. It's not going to be a place where the fives are just going to give it up and show you higher yields. There's no way when you get into a number like that you can press direction.
Yeah, absolutely right. That's a good point. And if you look, the 30-year for the week is up two full points at 64 ticks. The 5-year is actually down 1.5 ticks for the week. That'll tell you the move in the curve. And that's a 4-to-1, by the way. So if I'm trading 20 bonds or 10 bonds, I'm trading 40 or 50 or 60 5 years, because the ratio, if you're doing the yield curves, it's 1/30 to 4 or 5 years. Right now, that's a dynamic thing, but it takes a lot to move it off that ratio, but it does move.
And this is Stan 101, looking at the cloud. Went away from the cloud, came back to the top of the cloud, stopped there and screwed everybody again for the rally. Expand your time frame so you can see what's going on.
Yeah, no better chart than that gold yen at 1980.
Oh yeah.
Just drive it back to.
As Andrew points out, if you've done the work, you're prepared for what you're seeing and any divergences that take place. And
look, you can't get across everything, because that's the paralysis by analysis. And you can get caught doing. But you those types of numbers though, when they set up in the book, and then you bring it back to the quarterly, weekly, and daily, and you get a softer inflation number or whatever it might be, and you go bang, you're all over it because you know the number before you have to do the work.
And there's more money made in noticing divergences and trading divergences. That's when you're trading. I'm not talking about a longer term play. Don't confuse the two. I keep stressing trading because we are in a trading market.
Yes.
Hey, you know what the temperature is here in Arizona right now?
What?
Judd, you can venture a guess?
Oh, I don't know, 80.
53.
Oh, well, I'll send you a winter coat.
I'm wearing one. I have.
Ira, come back to New York. It's warmer.
Oh,
You know what? That's what I said to my wife, Stan. I said, we left New York, it was 72. I woke up yesterday morning, it was 45. I had to go put on a sweatshirt. I go, wow, is this pleasant?
Well,
Sounds good.
all right. So you guys, this is really important stuff. And for a lot of people, like yesterday, Stan picked out something that I didn't look at. And this goes to really going through all your charts. And Stan went and did the work on the oil you want chart, going back for the life of the contract.
That was a beautiful chart, Stanley.
And guess what? That caused, that was a level for a $2 break in the oil.
Yeah.
Going through those charts tells you what to do and where you can get away with and what not to do and where you can get away with doing trades. And it's those relationship trades that give you a big edge in trading.
Yep.
You're not going to see it in a 5-minute, 5-second, 2-second chart.
Well, that's what gives you an edge over people who are just focused on one dimension, right?
Right. They're one-dimensional mouse clickers in an execution screen, waiting to buy their Ferrari because they saw the ad on TV.
Joe, did you see my chat?
Yeah,
Okay.
I mean, he just did. He just
Oh,
did.
okay. I was on the phone, so I missed it.
No, we just had that conversation
Ah,
for you,
good.
Stan.
Good. Thank you. Thank you, Andrew.
Pleasure for whatever I did.
Well, Stan, because this is being distributed, Stan wanted the guys that the teams from the Pacific Rim that hear your and Ira's take
Oh,
on
cool. No worries.
timeframes, trading, the whole thing. So,
And just trading, what it's like to trade from the Pacific Rim, the US markets.
Yeah, we just went through that. Yeah.
Good.
all right, so we're coming up to the London's close and they're still pushing the gold, right up into this 50% level at 1800. So, we're coming to the end of this capital flow in the next 20, 30 minutes. And capital flow is exactly what Ira and Andrew have just been talking about. It's time frame trading the bigger flows when the different money centers come in and start their trading days, because you're getting capital movement then. And those are higher probability times when you can trade with the money flow versus trying to get creative and destroying yourself. It's you don't want to be a market taker all the time. You want, a market maker. You want to be a market taker, and you want to be like Ira and get stuff where, and Andrew, where you've done your technicals and, people are wrong-footed. Does anybody else have any other comments, guys?
Yeah, ask me don't be afraid to ask questions. Again, there are no bad questions. And Langer usually pipes in. He's been really piping in lately, so. Let's see, who's he got? There are no bad questions. The only bad question is the one that goes unasked.
Good point.
Great.
And we don't have all the answers, but, even if we don't, we're going to look around the board and keep ourselves out of trouble and look for low risk opportunity.
Yeah. And again, people are amazed when I tell them that every trade I put on, my first presumption is that I must be wrong. Well, not when I put the trade on, but when I think about it and I construct it, I must be wrong. And I look at everything as to go,
where you're wrong.
Yeah, where am I wrong and why? And then when I look at it, I go, yeah, you know what? There's opportunity here.
Well, we spoke about that trade again some weeks ago on the platinum down at 925 to 955, right?
Oh yeah.
And that was just that was a beautiful setup, because you had the long-term Fibonacci going all the way back to inception of the contract since 1971 to the high in 09. And I even know it without even looking at the chart. The 618 was 963. Now that's a great number, but you've got to go back to the shorter term part of the chart to get to get more concentration around that number. It's still a most important number because it's the inception of the chart. And then we had an outside range week 2 weeks ago. Well, if you weren't buying back into that 950, 962, you weren't paying attention. Now, the reason why, now I was buying slowly in those 955s. I remember Ira buying 925s, I recall. And then when we got the outside range week higher, then I'll go and look at seasonality, and then I'll just get, and then I'll look for some moving averages. Now looking the 200 week moving, sorry, the 400 week moving average was, the 200 week moving average is 928. And then
now we're holding the 400 week.
And then, so suddenly at 950, 960, it's just a beautiful zone. And you just lean against it. And you use for me, I use a lot of Fibonacci work, particularly 618, 764 numbers. I tend to ignore the others because I just get lost in the numbers a bit. But they're so important. And then there's your trade.
But knowing when you're using the fibs properly, Andrew's using them on long time frames. He's not doing it on a daily chart. He's not doing that on an hourly chart.
I'll use the long-term number, then I'll come back to a daily chart. I don't look at much shorter than daily, but then the feature, and then we get the outside range week, and we go, well, there you go. At the 618 of the life of the contract, you pay attention to that. You don't get that often. That's why. That's why I'm paying attention to that gold yen chart, because it's just a huge breakout, and it held some big numbers.
And it leads you to so many other things.
Yeah, I mean, it does. And then by the time this market gets back into trending as opposed from trading, you can lose a lot of money in that transition, because suddenly you start, the market gets you a little bit, caught with the fact that, oh, well, we're only trading. And then, I don't know, there's a bit of stuff going on that maybe we're not going to do that, but who knows? But we have been oscillating, gyrating around a lot of big numbers for probably as long as 3 or 4 months. Other than the ags and the commodities and the long end, certainly in currencies and stocks and gold and stuff.
Yeah, and I did some work on the Russell too. And, this is something that it looks like it can go sideways until the end of the month, which is kind of interesting where the skinny part of the cloud is.
That thing's been going sideways since February.
Yeah, but it's just a huge, you look at this thing. We just kind of looked at it this morning. If you look at the March area, and then, I don't know if you want to draw this here, but it's just this huge area. And whether you think it might break out and make higher highs or lower lows, I just think it's going to be stuck until it gets to the skinny part of the cloud and tries to decide what it wants to do on the daily, which is closer to the end of the month.
Yeah.
So other than that,
Judd,
yeah,
Bruce Light wants to come in for a little bit. Can he send you an email?
yeah.
Okay. I've been texting with him while I'm sitting here. So, you know what? I'm just going to share you guys with an email and you can go from there.
Well, no, I've got his email here. I just
All right.
haven't put it into this,
Yeah, go ahead.
into that invitation list. It's not a big deal.
All right, go
Hang
ahead.
on a second.
I will tell him.
Happy to have him. And I got the thing from Eddie too.
Oh, you got the thing? I sent you that, right?
Yeah. Yeah. And then
I saw Eddie last week when I was in Chicago. I had talked to him, I had invested in his film company, Forager, and I had to change on. So I actually saw him. I was kind of surprised that he went, because
okay, there it is. I just have to, come on. All right. Bart is at, because that 764 kind of splits the fibs, Bart. I don't know if you want to address that, why you like the 764, Andrew, versus the 618.
Oh, it's just Fibonacci's in itself, you can sort of go and do a lot of work on why you like them. But a lot of us, certainly we by fluke, by chance, worked with a guy, and he used to call it the death zone in that 618, 764. Just that zone in of itself. Then I'll go and look to match it up with averages. I use a lot of close work. What's the yearly close, quarterly close, weekly close? You hear Judd speak constantly about the opening range. That gives you some pivot from the start of the day or the week to use later in the week. The point, particularly when you use a lot of technical work like I do, you just got to be careful not to get too paralyzed by the analysis. There's a lot of numbers.
Yeah, and the fibs that Andrew uses are spectacular on really long time frame charts.
Yeah. It's like a heat map. You're trying to get as much confidence around a certain level. Obviously, as you develop as a trader, you want to also be able to read a board and what does a yield curve mean, and a bear steepener or a bull steepener, all that sort of stuff. And then when you apply your levels to that, well, you're graduating to a whole new dimension. That takes time. So unfortunately, that's the reality of life. Everything fucking takes time. You got to just sit there and got to do the work. Got to keep doing the work. But as a pure technician, yeah, those levels are quite healthy. But I'm not going to go and pile into a 618764 just because of the 618764 necessarily. But if the board lines up and I've got some technical support and then some fundamental support, then for sure. One of my best trades ever was basically gold yen and dollar yen back in 2012 when Abe was elected. And it just happened because dollar yen was around 82, 83. 82, 83. It happened on the day he was elected, or certainly was nominated. It was crossing the 200-day, 400-day chart just that day. It never went back below it until 105. But again, you had to do the work and know the catalyst of his election to then use the averages.
It's back in here.
Yeah.
What was that, in July?
No, it was in November. He was elected in 13.
Judd, I just sent your response.
Okay,
She's great.
okay.
Okay, you see.
The daily, if you go to daily averages, I'm obviously a long way back.
I tried to use her when I sold my house, but she wouldn't take the business. That's how good she is. All right, I'm going walking. Too nice.
Enjoy your cold walk.
You know what? It is so pleasant that I just have to enjoy it. I just have to enjoy it. Keep your eye on the grains today with that yuan up. That's all.
Okay, thanks.
All right, guys, anything else? I am gonna go walk my beast and clear my head.
Cheers.
Okay, guys, I'll be back at it around 12:30.
John,
Yes,
make sure you pass that on to Langer and let me know.
I just did.
Okay.
Thanks.